Good morning. Happy Friday. It's May 12th. We're looking at, your boy has a bit of a cold. So you'll hear some snot blowing, some crazy noises. And as somebody on YouTube pointed out, I think it was months ago, you're going to hear some mouth noises. So buckle up, buddy. ASMR is in the house. Let's talk about the debt ceiling. What happened with the debt ceiling yesterday, they put off today's meeting at the White House because staff members have been meeting and have had some progress. You've heard from the Democratic side, we've had some progress. You've heard from the Republican side, there's nothing going on. So a bunch of bolster, fear-mongering crap again. But make no mistake, Jim Cramer is saying he is concerned. So have no concern. Inverse always wins. Jim Cramer announced on Twitter that he was sorry for his downbeaten tone. Douche. So I think there's a running poll probably on Facebook how many times I say douche over an episode. But the debt ceiling, we talked about it. CPI with the inflation, PPI with the cost of goods, the producer price index, and then the debt ceiling. We've covered two of the three. So here's the thing. And we'll look at long term. SPY here. It's been in this trading range. I mean, this is the 4-hour algorithm. It got you another buy yesterday at 411. In pre-market, you're at 413. What's interesting about this is if we go to the weekly, and we've been talking about this wedge here. I'm going to zoom in here, and I'm going to pull this up. Now, typically what I say is when you're over this 9-day EMA, and that's the green line, you have what's called confirmation. Well, if we hold above 409 today, if we don't go down to 409, I think you still have confirmation. And look, you're not going to close, it's not going to 100% be a green week. So far, it's a red week. You're down 0.2%. You opened at 412. You're closing right now at 412.13. So it's in this trading range. It's just not going anywhere. So that's where we are with SPY. Again, I think 409. Now, let's take a look at the same thing on QQQ. And then we're going to go over to Seeking Alpha, and we're going to look at that. Here is QQQ. You had this buy-in here on April 28th at 320. You've still got confirmation. You're still going. You're above that. This is on the 4-hour algorithm. And the 4-hour algorithm, so you know, over 2 years, if you had bought QQQQ with the algorithm, you would have gotten in and out 28 times. You'd be up 2.29%, and that's not including this current one. If you had just bought QQQ and held it, which I do recommend if you want exposure to the Nasdaq, you're up 0.36%. That's over 2 years. Now let's take a look at the weekly, because that's what we saw with SPY. You don't have the wedge. You absolutely 100% don't have the wedge. You're above that 200-day, so you're moving pretty well. Here's the highs back in January 2022. So that was well over the 200-day. You just touched the 200-day. When you broke the 200-day back here in January, December, that was the buy. You didn't know if you were going further down. You didn't know you were in a bull market, but it's clear we're in a bull market. You've got confirmation. Let's zoom in a little bit. See, you're in green. You're up 1.17. Well, I don't know if you're up, but during the period, it's 1.17. You opened at 322. You're closing right now, as of yesterday, 326. In pre-market, you're holding. It's 326.59. So where are we? Here's the year-to-date. Here is SPY, QQQ, Dow Jones, and IWM. So SPY is up 8% year-to-date. QQQ is up 23% year-to-date. Dow Jones is up 0.64, barely making it. Your small and mid caps, IWM, where everybody's saying that's the opportunity, I just don't see it. I think big tech is still the opportunity. But IWM is only up 0.19. Or I'm sorry, it's down 0.19. So that's the year to date. Let's talk about, I've completely dismissed my Webull account. My Webull account is only up 5%. It is Dow Jones based. The Dow Jones is only up 0.64. This is a $1,000 challenge that I took for the year. What I'm doing is $1,000. Whatever I make in this account, I will donate at the end of the year to charity. It's going to be an ongoing thing that I do. I'm hoping that I can make about $2,000 in this one. I focused on the Dow Jones because I thought that was going to be the one to take off this year in the quote-unquote recovery. I was 100% wrong. So my Webull account is up 5%. My Fidelity account, which is Nasdaq focused, is up 23%. My Webull account has a couple of shares of Apple, not a ton. It is, again, it's Dow Jones based. I think it's got Caterpillar in there. It's got Boeing in there. It's got Disney in there. There is very small amounts of each, but it's Dow Jones based. And remember, the Dow Jones is only 30 stocks. QQQ is a 100. It's the 100 Nasdaq stocks. So, yeah, should have been Nasdaq based. It again, you want to base yourself against an indices for that one. The Dow Jones is only up 0.64, but my Webull account is up 5%, so I'm beating it. If I were S&P focused, I would not be beating it. I would only be down. I would be down 3% because the S&P is up 8%. So clearly, I would have been better just going SPY. Would have been better going QQQ. Small and medium caps, I don't like them. But that's the difference. So there's your overall look. Now let's get into specifics. Tesla. Musk found a CEO. The CEO has been identified. It is on the private Facebook group. Go and look at who the CEO, the new Twitter CEO is. I posted a photo. I will not ruin it. Those on YouTube Live have already seen it. But if you're not part of the Facebook group, go and look. I posted her picture. It will shock you. It will be, you will never guess who he picked. Yeah. Let's just say she's a math major. And let's just say, she's had some interesting Caribbean vacations. But found a new CEO. They also just raised price. I said, hey, with Tesla, once he found a new CEO for Twitter, it was off to the races. I think it was up 3 or 4%. In pre-market, it's up 2%. I think you're looking at a 10% run on this one. I think you're going to cover this one up to 179. This is the 4-hour algorithm. You got this gap down here. Now, you still have this gap back here between down to about 145 that has not been filled. I think you start adding to Tesla here at 175 because I think there's a lot of positive news coming out of this. I think full self-driving coming out with full AI from point-to-point AI, I think that's a huge step forward. Full self-driving is what they're putting this company on. He's basically selling the cars at less than a 20% margin, which, by the way, historically with Ford and GM having like 4 and 5% margins, he's doing incredibly well. But Ford and GM, you just don't want to own. But I do think that this stock is he's going to be focused on Tesla now. I think he will start moving this stock upwards. Remember, he only bought Twitter because of the Tesla stock, and he knows this. So Tesla stock has to continue on that one. Oil. If you want to know what's going on with oil, just go to finviz.com. Look at this oil chart. Crude oil, you can see it's going up. I just don't think it's going up. This is pre-market. It's 1 day. If you want to look at crude oil, just click on there. We're going on 4 weeks now of a downtrend in oil. And you're seeing a pretty good move down. Now, the question is, do we continue that one down? I don't know. I like energy stocks. I like PXD. I think Exxon at 100 is a great price. I think CVX, which is Chevron, in the 150s, is a crazy good price. Doesn't have confirmation. Exxon doesn't have confirmation. It's at 106. Your Devon Energy. I got asked yesterday, is Devon a good one under 50? I think so. Even though it's at 47 and it's hanging back here, I don't know if hold on, your boy has to blow his nose. Like I said, ASMR at its best. Oh, and I'm not pausing this. It's too much editing involved. But Devon's one of these, if we look at Devon and we go to FinViz and look at Devon, the average price target is still 66. Now you can see the most recent kind of downgrade initiated coverage USB neutral with a $60 price point. You can see down here, there's people buying, the CEOs and the management, they're buying in the 40s and 50s. And now they're not buying a ton, but look at this, $49.98, the EVP COO just bought $1 million worth. The president and CEO bought $1 million worth at around 53. If you don't think these guys are managing to that price point, you're out of your mind. They're going to manage to their own purchases. So is Devon a good one? I think it is. Is PXD a good one? Let's see. I still don't have PXD in our core portfolio, and I probably should, because Devon, by the way, while you're waiting for it to get up to 53, 54, when you buy here at 47, you're getting paid a 10% dividend. Why not? 20 Pioneer. I bought in at 208. It's trading at 207 right now. I've enjoyed a dividend while I sit here and wait. It's in this range between probably 180 and 240. I think you can take advantage of that range. I think what you want to do is if you're trading in a brokerage account, you want to wait until this gets to a long-term capital gains, which means 1 year. If you're trading this in a retirement account where there's no tax events, I think you could take some profits around some of these charts. Now, you'd be out as far as the algorithm goes, the 4-hour algorithm. The 65-minute algorithm on PXD, you'd be out as well. You have this descending triangle on on PXD, and it's not good. It's kind of putting in its base here at 206. I think that's a good base for it. Let's look at the 65-minute on Devon. You've got the same kind of chart. It has you out. You just don't have that descending triangle that you saw on the other one. But it's very clear that this one is kind of in a no man's land, if you will. Now, the 65-minute algorithm on Devon loses you 15% over 8 months. If you would have bought and held, you would have lost 33%. So it's a good one. That 65-minute algorithm is great for things like this if you want to get in and out. I just think oil and energy, it's been the recession fear. That's been it. Bond rates, I bring up bond rates here. When they talk about inversion, it means that the short term is higher than the long term. And when you look here, the typical inversion for a recession is when the 2-year is higher than the 10-year. And so your 2-year here on Fidelity, U.S. Treasuries, is at 3.98. Your 10-year is at 3.4. That was bigger last year, but we've been inverted since March of last year. And there was a lot of economists who were screaming we're heading into a recession because of the inversion. Inversions always lead to recessions historically. So we might see a recession. The question is, and I think the Fed is leading us towards a recession. I think most of their staff believes that we'll see a recession. It's just how deep will the recession be? Now, when you go to 3 months, here's what you have to know. You're not getting paid 5.19 for 3 months. It's an annualized percentage. So you hold it for 3 months till maturity. You don't get 5%, but you get the annualized 5.19. Since it's a U.S. Treasury, you don't pay taxes. The reason this is so high is because of the fear of default. If you start defaulting, this could wind up not being paid at 5%. Simple as that. So it's a little bit hard to look at in that am I going to get paid as a U.S. Treasury? CDs, when you buy a CD, your money's locked up. You can, if say for instance, we don't default and that 5.19 all of a sudden goes up. Well, here's the thing. If you're guaranteed 5.19, great. So if we don't default and you get 5.19 for 3 months, fantastic. You can always sell that U.S. Treasury, before its maturity. For a CD, if you back out, you can't get that money. The money's locked up. There's like a 10% penalty and stuff. So I'd rather see you get U.S. Treasuries if you want safety. Let's talk about PACW. PACW yesterday was down 20%. They did not make an announcement. Like I said, they had to in order to kind of appease the market. So I would stay out of this. I would absolutely not get into this. I would probably stay out of DPST. And the only reason I would stay out of DPST, you're heading into a weekend. There's no reason to risk your money over a weekend with something like the regional banks and management like, PacWest. Just sit around. If you want to put your money in, put it into TQQQ, one of the triple levered ETFs or something like that. I think you're absolutely 100% safer in those things if you want to hold over the weekend. I don't necessarily hold those things over the weekend, but hey, have at it, Hoss. TrendSpider posted a chart last night about NVIDIA. NVIDIA, you're in here at 275. You're trading at 285. Their earnings are coming up May 24th. It's been just on a historic run since January. This is the 4-hour algorithm. If you got in here at 147, kudos to you. There has only been one time where the algorithm has gotten you out. Now, here's what you have to know. Over 2 years, my algorithm produces 123%. Nothing to sneeze at. So if you get in and out, you had 24 positions. Your average win is 19%. So that 275, it looks like it could wind up being a winner. If you bought and held this stock, you'd only make 101%. Now, I say only make 101%. This is one of those where you probably just want to buy and hold. But if you didn't, this is what I wanted to show you from TrendSpider. And how do I get this up here? Oh, there we go. We're going to move this up here, and we're going to go back, and we're going to do monthly. And we're going to go back to the IPO date, which was 1999. June. You only win 48% of the time. And I got to sneeze. It's one of the lowest months of the year. January is the only other worst month. Oh, and your boy has to sneeze. I'm going to put that. Oh, don't you hate it when you have to sneeze and then it goes away? But it's 48%. It's one of the lowest months. Look at the rest of the months. I mean, it's huge. This stock has just been a killer since 1999. So January, it's red, 38%. You just don't want to invest in this in January or June. And I would say hold off if you want to open a position. And that's the reason. I love TrendSpider. They give us actually, clicking on that stuff. It's just nice and easy. Again, TrendSpider is just a tool. It's fantastic how they just allow you to click on stuff and look at it. But it's the seasonally it's the second worst month. So don't start a position here. And I am going to do a chart with sell in May and go away over like the last 5-6 years. Let's get into some user questions or listener questions. Brian from Facebook wants to know about Perry and SE. And he asked me about Manchester United. I won't go into Manchester United. I'm just not I don't want to invest in sports. I want to watch sports. Here's Peri Network, PERI. You had a 4-hour cross up here at 33.28. You're at 34. Historically, I mean, it's pretty high. It's gone on a run here, it looks like. You've got a gap down here between 25 and 26, it looks like. Their earnings, 61 cents, 90 cents, and then back down to 60 cents. That seems to have brought them down here. Maybe they did a pre-announcement or something. Let's look at their fundamentals, see if they're making money. Their PE, they are communication services. Let's go down to the bottom and see what they do. Provides digital advertising solutions to brand agencies and publishers in North America, Europe, and internationally. It provides Wildfire, a content monetization platform, search monetization solutions, including website monetization. So it's kind of an advertising. Advertising, if we go into a recession, is going to get absolutely destroyed. That would be my fear of this one. Has it been beaten down enough? I mean, if you look at this, it's still in that upward trend from its October 2022 lows, where it was trading at 22. I'm not sure where the actual catalyst is, but here's the thing. The target price is 38.81. You look at April 24th, they were downgraded with from Stifle, tomato, buy to hold, and $36 price target. The only other analyst coverage was a buy, but that was from Stifle in February of 2022. So it doesn't get a lot of coverage. But that $38 price target average, and it trading at 34, what's your upside? Your 52-week high is 42, probably was overhyped. 52-week low was 16. You're 170% above that. Their market cap is $1 billion, so they're a tiny micro cap. It's an Israeli company, which, by the way, should always be invested in. Those guys are just incredible. I don't see any insider sales. Nothing gets me excited about this. Do I think it's going back to those 42s? You'd have to be perfect to go back up there. I think you're probably heading back towards that gap down here at 25, to be honest. You're just at your 200-day. I mean, let's take a look at a weekly just to see. It's been an outperformer. So if you think that it could continue to outperform, great, invest in it. I'm not seeing anything that tells me, hey, that's a fantastic opportunity. I think you missed the boat on that one. C Limited, SE. This is one that has been a pretty good performer since the December lows of 52. You're trading at 86 right now, and it's been on a run. Their earnings are coming up May 15th. You do have confirmation on this one, but the RSI is super high at 70. The MACD is up there. The algorithm loses you 45% on this one. So I'd be kind of wary of it. But hold on. Need to blow. Okay. And I do apologize for those of you that are disgusted by colds, but I think the information is better. 75.19. If you got in at that and you're at 86, that's great. I mean, look at this run. From March at 62, got you out with a 33% gain. Fantastic. If we go to a long term of C Limited and we go to a weekly, you can see it's just beaten down. Just it's below its 200-day. It's just beaten down. Are you 86? Is that a beat down price where you can go to? Let's see. This was up here at 337. It's a consumer cyclical. Internet retail, they're not making money, and that is why you see it in a bear market. It is up year-to-date 66%. It is only 7% below its 52-week high. I do think that you want to take a look at those 52-week highs. Not all-time highs, but 52-week highs. The average target price is 101, and you're trading at 86. There are a ton of downgrades here. Most recently from January, Bank of America, Biden neutral, $60 price target. April, UBS, Biden neutral, $92 price target. The benchmark company initiated coverage in April with a $105 price target. You don't have insider sales. Again, you're going to have to just decide, is this a company that I believe in long term? Because they're not making money. Price to sales, 383. Doesn't have a dividend, so you're not getting anything other than growth. But was it beaten down here at 40? Probably. I mean, you've doubled your money since January. So I'd be a little bit careful, Brian, but I do like both of those picks if you're already in them. Dominic from Instagram wants me to look at SOXX. This is the semiconductor ETF. Now, it's not a levered ETF, so it is more like QQQ and something that you probably want to hold long term. The algorithm has you in at 413. You're trading at 411. The algorithm actually doesn't work on this, so you have to be a semiconductor fan to actually own this, and you look for good entry points. The algorithm loses you 11% over 2 years versus buying and holding makes you 2%. So I'd be a little bit wary, but most likely that comes from us being in a bear market for the last year. Remember, January 2021 was the highs. So all of last year, you were in you 18 months in. Are we in another bear market for semiconductors? You've had your run up. Again, this is just a semiconductor index. The RSI right now is at 48. Your MACD is kind of below the oscillator. I do see from February here, if you want to look at it, you're seeing significant reduction in volume. You saw the pump up. Look at last year. We'll take a look at a weekly, and we'll see the volume from the weekly. See how it pops up here, and then it kind of comes down. Right now, it's kind of in no man's land for the weekly and RSI. You're above your 200-day. Are you getting back to these January and December 2021 highs at 562? Probably at some point in time. But even QQQ, we're not in there. Personally, I'd rather take it out of the semiconductors. And if you want to just invest in QQQ, I think that's probably a better alternative. And if you want to trade something, I'd trade the semiconductor ETFs, triple levered ETFs. So SOXL, I think, is this is the bull 3 times semiconductor one. This one, the algorithm loses you 45% versus 55% if you buy and held. I do not suggest you go from SOXX to SOXL or SOXS. These are trades. I'd rather see you take 50% of your SOXX and move it into QQQ and maybe trade SOXL and SOXS based on some type of system that you have. Maybe it's the algorithm that I use. Maybe it's the 65-minute. These are triple levered ETFs, so you don't want to hold them for very long. But I think, Dominic, that's the way I would play it. And the only reason I say that is if you're long semiconductors and you think that they are coming back, this is the first bear market we've had, by the way, in semiconductor industry. So if you think it's going back to a bull market in semiconductors, I think SOXX is great. But make your own decision. Melissa wants me to talk about fossil fuels, electric charging stations, and EV stocks. She thinks it's our future. I know it's speculation, but let's get in early. I told her I'm not an energy expert. The energy that I hold right now is Devon, MPLX, Exxon, and a couple of others, PXD. And I hold them for the dividend. So from a fossil fuels perspective, we're not getting off of fossil fuels. I don't care who you talk to. If they say we're getting off of fossil fuels, there's no bigger environmentalist than me. I'm not a hippie who completely ignores everything that like I still use plastic. I limit my plastic. I have an electric car. I try in my carbon footprint when I fly on planes. I don't buy carbon offsets because I think that's the biggest bullshit ever. But I do limit my carbon footprint. My trash, I think I put my trash out just to give you an idea. My trash, I can usually fill one bag of trash in 3 weeks. So I don't create a lot of trash. I live a minimalist lifestyle. But fossil fuels are here to stay. If you are investing in fossil fuels and energy companies, I think what you do is you pick the one with the biggest dividend or the ones that have been beaten down. One or the other. If we're heading into a recession, you can see oil. It's going to continue to go down. We went over PXD a while ago. PXD has an 11% dividend. I think 206 is kind of the platform there. where you kind of buy in if Exxon buys them. I like Exxon as well at about 100. I think you can see that one go up to 120. And you got a good dividend on Exxon. Devon has a 9% dividend, and I think it's a $50, if not $60 stock. But that's your fossil fuels. Electric charging stations. I have friends that, and I just had this experience. Let me kind of tell you my experience. So I own a Tesla. Tesla is the only one with its own charging network. So when I do road trips from Atlanta to New Jersey or down to Florida or anywhere, I can stop at Tesla chargers, and the car guides you to these Tesla chargers. And the great thing about the Tesla network is, say there's 12 chargers. Live, the network will tell me that 8 of them are used and 4 are open. If all 12 are currently used, it will put me in line. And when I get there, I know how long I have to wait to get a charger. I had a situation where I was driving my parents. My dad went to the hospital and then to a doctor, and we didn't have miles on the car. So I got to the doctors in the mornings, had to take him to the doctors, and I get there, and I think I've got 10 miles. I get an alert that I better get to a charging station soon because my car may not make it to the charging station if I wait. So I dropped him off, and I said, I'm going to a charging station. I pulled up a third-party app called ChargePoint. ChargePoint is secondary chargers, and I knew there wasn't a supercharger necessarily close by, but I thought I could go to a secondary charger. So I pull up ChargePoint. It is an app on your phone, and it has local and kind of like, think of mall chargers, things of that sort. And I pulled up Electrify America. I saw ChargePoint had 2 chargers, and it said both were available. And it was 1 mile away. I said, great. It's slower than a Tesla supercharger, but I'll go over there. It said 2 were available. I get there. Both slots are taken. And it's not like they were taken between the time when I looked at the app, because I looked at the app live. It said both were available. That's the benefit of Tesla over all of the other EVs, meaning GM, meaning Ford, meaning Volkswagen, meaning Audi, meaning Mercedes. Any other EV, Polestar, they don't have a charging network. Rivian, they don't have a charging network. Rivian is the only one who said they will build one. In fact, I saw the first Rivian Amazon truck. If you guys haven't seen it, look at Amazon trucks. I mean, they're deploying them all over, but I saw the first one. It's awesome. And Amazon will most likely build their own charging network for Rivian because they see the benefit from their own truck stuff. They want electric vehicles. So I just don't think there's a winner out there yet. If you want to invest in fossil fuels, I think in TrendSpider, I have a list of energy names that you can trade. If you want some ideas, it's just Exxon, MPLX, Devon, PXD. I mean, that's Chevron. Go with whatever tickles your fancy on that one. If you want electric charging station stocks, I think we're just not there yet. And I think those guys are just losing money. I have a friend that owns an electric company in Florida, and Electrify America asked him to install chargers. And they asked him to install chargers at a loss to him. He said, F you, I'm not installing those. Good luck in finding somebody to do it. They found somebody to do it. And my buddy, who actually has a Tesla, goes over there. Half the time the chargers are out of service. And remember, as a network, it doesn't tell you when they're out of service. So if you're on a road trip and you go to a Walmart charger that is an Electrify America charger, A, they may be taken. B, they may be out of service. So I don't like anything. If you're going to invest in EV stocks, it's Tesla. Tesla's the only one, Melissa. That's the only one I can kind of long-term tell you to invest in. Now, if you want to trade GM and Ford, I think you're okay doing that. But there you go, Melissa. Oh, man. Hold on one second. My mouse went over there. So, yeah, I am not good at editing, so I am not editing any of this. Let's see. Mark from Facebook. Curious about your thoughts about Datadog. I'm in at 64. Great tip. Hey, Mark, high five. Just wondering what your thoughts are for long term. Datadog is one of those stocks. Let's see. DDOG, by the way, is the symbol. It has been crazy. I mean, it got good earnings and it gave good guidance. You've got gaps below this. I'd be concerned that you're seeing kind of that button hook that I see a bunch. Your RSI is at 75. It is so overbought right now that it's, the sellers have to show up. When you look at the 52-week, a 52-week high is 120. And that was way back here in, it looks like October of last year. It's just been a loser ever since. It is not making money. They're losing $50 million a year. Their market cap is $27 billion. They have cash on hand, $5.95 per share. So they're not going bankrupt. It is up 17% year to date. It is down 11% over 1 year. If you're in on this one, I would say I just don't. Here's an article, by the way, May 12th. So today, from Motley Fool. Why Zscaler, Snowflake, and Datadog surged this week. Just look at that article. Figure it out. I don't know exactly why I just saw, hey, Datadog crossed the 75, and it was a great option, way to get in. And when you see this under the 200-day, I just think a company like Datadog that is data, and they are very well respected, by the way. This is not one that's losing money that is not respected. It is a hugely respected company as far as data goes. I just think when you get under the 200-day, you kind of buy it. If you want to trade it, you kind of buy it. It's just one of those things. If you got in at 64, take some profits. I would definitely take some profits up here because I'm seeing that kind of button hook. If we go to a long term, let's look at a weekly. Yeah. I mean, you could be coming back up to here to 162. I don't know that that's necessarily the right thing, but the average, let's see, the average target price on this is 97. You're at 85. I'd take some profits. Don't worry about that last $10. If it soars above 97, maybe you continue to hold on to it. I'd definitely trim. I don't think this is not like a Tesla where they weren't making money and you continue to hold it even though they aren't making money. Datadog is probably one. A good example is Snowflake. Snowflake I have in my retirement account. I just continue to add to it because I do believe in it long term. I've trimmed some every now and then, but it's in a retirement account. So when it makes some money, take some money off the table. Overall, I think I'm still down on it because I bought at a significantly higher price. Last question, and I love this name. Hogan Von Hulk asked on Spotify, just so you guys know. And Hogan, I love that name. I can't reply on Spotify. That's why I ask you guys to actually use the link tree below because I can actually respond and talk with you guys on any of the socials. Spotify, when you leave that question, I can't. But I do love it. He asked, where would you recommend we put the majority of our money if we to trade, if not Robinhood or WEBULL? Let's make this clear. WEBULL, I like. I have $1,000 in there. I just don't think it's a money manager. I think that the three that I would go with. First is Fidelity. If you have more than $2,500, remember, just send me an email. And I'll get you, I think it's $100 is what Stuart will give you. It comes in a gift card. I think Brandon got $100 in a gift card or something. We've done it a couple of times where a couple of people have done it. It's not a setup platform because remember, I don't sell a lot of shit on here. I don't charge anybody crap on here, but Fidelity, I do personally believe in. And I told a story about this where my parents were a little bit upset at Fidelity. Stuart took care of everything. Stuart's now their money manager. Fidelity has a significant amount of tools. So education, they have people on the phone that know what they're doing. There is a lot of things that you can do where WEBULL and Robinhood don't give you. I do have $1,000 in WEBULL. The reason I won't go with Robinhood is I just don't like the interface. It is 100% an app. When you go online, there's nothing. I need charts. I can't do it on my phone. WEBULL has a great platform where you can download it on your computer and do charts. You have to learn that stuff. If you're going to trade, you have to learn that stuff. Do not trade on hope and pray. Understand MACD, understand RSI, understand moving averages. Understand that stuff. Go to FinViz and understand that stuff. WEBULL doesn't give you all that, but at least they give you charts. Robinhood gives you none of that stuff. So that's why I bash them. I would go with Fidelity first. I think if you have a large amount of money, you could go to Schwab. I think Schwab these days is probably even wooing you a little bit more. But the third one I would go with is TD Ameritrade. They were really good with me. I liked them. And when I was trying to make my decision about, I was shrinking down from 4 or 5 brokers to 1, and I made my decision to go with Fidelity. TD Ameritrade came close. The only reason was I had a lot of money to transfer over. And Fidelity, let's just say, made it worth my while. Money talks, and, listen, they made it worth my while. They were easy to work with. I actually enjoyed them. I think my initial person where I transferred it over, some of it over was another person over there. But I would say if you're in Robinhood, try and get your money out. Try and get some money out. Transfer it. See how long it takes. It takes me 1 day from Fidelity to my bank account. 1 day to transfer. So Robinhood is talking about 24-hour trading. I don't know that I want to trade 24 hours. They're talking about, significant stocks being traded for 24 hours. I think I'd be too nervous on that. But great question and great name, Hogan. I love that one. Let's talk about scans. VOO. We talked about how SPY and S&P is just kind of trading in this range. 378. Do you get in? I think we're a little bit extended. You could get in. 5 years from now, you're not going to worry about 378 versus 360 on VOO. But it had a cross up. SPXL. This is the S&P 3 times bull share. Got a cross up here at 73.28. UPRO, which is the Ultra. This is Ultra Pro S&P 35.58. If you want to trade that one, again, it's a little bit extended. PDD. This is Pinduoduo. This is a China stock. I'm not recommending a China stock, but I will tell you, these trade on huge swings. You can see right now how beaten down this is at 65. There is a gap up here at 83 to 90. Take your lunch money, put it in there. I mean, just Pinduoduo we can look at. If you want to see BABA, I don't want that one. That's a cryptocurrency. BABA is Alibaba. You can see how this one was beaten down, and the buy-in here was 82, and you're crossing up there at 85. So it's doing well. Pinduoduo, I think that's a good one to probably, take some quick money on. Fast and All Company. This one has just been soaring. It's got a secondary cross up. That's why I bring it up. Secondary cross up. It's done really well since December. 49 was the buy-in. You're 55 right now. It's a pretty good company. Team, which is Atlassian. This is a pretty good company. I think it's just gotten beaten down. It's at 135. The RSI is at 38. Am I excited about it? Nah, I'd rather see it in Google, to be honest with you. Booking Holdings. This one has had a ton of cross-ups recently, and it's just trading in this range. 25.17 to 26. It's expensive. It's expensive, and even when you go to FinViz, BKNG, and you look, it's just expensive. Look at that PE for a travel company at 34. That's huge. It is up 31% year to date. And you can see the week, the month, the quarter, the year. It's all up there. Average target price is $28.41. So, yeah, Booking Holdings. And the final one, which is actually a shocker, Schwab has a cross up. 47.74. You are up 3% in pre-market. This is the one if you want to buy and hold over the weekend. I don't think it's bad. I think it's put in what is considered. Hold on one second. Your boy has to make. William loves when I make these noises. So yeah. Absolutely disgusting. But Schwab is one that I think you could take a chance on here in the 40s. If you get a 40 handle, I think you're doing well, because if we go over here and we look, they already passed their ex-dividend date, and their dividend is excuse me, 2%. So it's not horrible. You're seeing some downgrades. The average target price is 66, and at 49, if you get 66, hey, hallelujah. Look at all the recent buys. These are all in the 50s. So that's going to be where they're targeting their price for too. So Schwab is the final one. So hold on one second. Going to take a sip of water. Then we'll go into our sponsors. First sponsor is Visible Phone Service. If you're paying more than $30 a month for your phone service, use the link below. You'll save $20 off your phone service. It is fantastic. I use it myself. I love it. I think they're having a special offer where it's $25 a month now. So your first month is only $5. If you've got an eSIM, use it. Second, TrendSpider. These guys, the charts that I use, everything that I use, I had a couple of people subscribe over the past couple of days, sent them all the links for the algorithms, the 44-hour algorithm, the 65-minute algorithm, all of the watch lists, the core portfolio, the scanners that I use to look this stuff up. It is unbelievable, and it is all of these tools. I don't even use half the tools, but all of these tools are unbelievable, and they continue to actually add to them. So that's the second thing. Third thing is, if you're listening on Spotify, you should go over to YouTube. Just subscribe, please. Begging. Hit the thumbs up button if you are on YouTube right now. Make sure you're subscribed. I go live mostly, but I do post the podcast as its own video. So you can subscribe. You don't need the alerts on. If you have the alerts on, you'll know exactly when I go live in the mornings. But most people have jobs. So real daytime jobs, trump this. But like I told someone last night, the reason you lived for me is to get that FU money. So I would continue to listen. But I will be back on Monday. I am traveling back to Atlanta at some point next week. So there will be probably 1, maybe 2 days where I'm not broadcasting or not recording. And the elephant in the room is, yes, I did shave my head. So if you go on YouTube, you can kind of see the new haircut. Yeah, I look special. Riding the short bus, my friends. Riding the short bus. But have a great weekend. I will talk to you guys later. Enjoy.